All right. Hello, everybody. Welcome back to another market close. I mean, you guys already know what we're going to start with. $27, bro. We are holding 27, and it's pretty damn amazing. Right now, we are 15 minutes away from a Palantir close above 27. I think we're going to get there. And it's going to be really fucking fun to see. 27.22 of 5.2% on Palantir. It's not just a 5% day. Like Palantir has had 5% days before. It's 27. That number we have not touched since the Titan contract back in March. And we touched it for like 30 seconds and then it left. Today's been a whole day where it's above 27. In the morning when it got to 26.30, that's where we felt just looking at order book volume and where the resistance was and kind of a gut feeling that we think it could run to 27, right? There was 46,000 shares waiting at $27. That's a relatively inconsequential amount. It's not like there was a million shares waiting to be sold. And whoever sold at 27, there were enough buyers to buy it at 27, and there's still enough buyers ready to buy it at 27, 22. So in the morning, we thought 26 could turn into 27, and by the end of the day, we got about 14 minutes left. It looks like we might end above 27. Not only Palantir above 27, Tesla trying to make a close above 250. This is incredibly important, not only obviously for Palantir, but also for Tesla from a sentiment perspective and also from a technical perspective. According to Meet Kevin's technical analysis, if we fail to push over 250 and volumes decline, then you could revisit 230, which is the 2.5-year trend line. If you close above 250 and then get to 258, the next stop is 295 if you look at it purely from a technical perspective. So we got about 13 minutes left. Then you have after hours trading, but it does seem like we're going to close above 27 on Palantir, and hopefully Tesla can get back right above that 250 level, and it's going to be exciting to see it play out. How's everyone feeling? Let me know your raw thoughts in the chat. How are you doing? I mean, this is fun, dude. We haven't seen 27 in a very long time, and we're here. I tweeted, it's really nice to see Palantir kind of like Tesla started running, and then Palantir was just like, wait up, like it was its bigger brother. And it's like, hey, wait for me, and they're besties for life. And maybe a two-stock portfolio, Palantir and Tesla, does outperform over the next decade. On top of that, Robinhood. I mean, that Robinhood dip to 2172 was incredible. Right now, it's at 2270. I posted this picture when it was 2263. Again, the main reason for the drop, if anyone got that dip, congrats, because that drop was relatively inconsequential. It was because of Bitcoin. And we know that Robinhood is deviating just from being a Bitcoin-related stock because it's not a Bitcoin-related stock entirely. And so that's been a good thing. And then on top of that, Bitcoin did start to normalize a bit at this 56,000 level. So that's really good for a lot of the crypto stocks. I mean, if I told you Coinbase was going to go green on the day after being down almost 10%, I wouldn't have believed myself. Coinbase is 0.36 down on the day. It was at 209 in the morning. At 9:40, it was 209. Coinbase is 224. Bitfarms is up 6%. Cypher is up 1%. IREN up 3%. All-time high on IREN. Iris Energy. Hut 8 Mining is up 2%. Marathon's only down 4%. It was down 6%. CleanSpark, it was down 6% during the day. Now it's down 0.74%. Bitcoin trying to get back to 57,000. Ethereum trying to get back to 3,000, $7 away. And then Robinhood right here at 2270. Really nice recovery from 2172 on the day. Even MicroStrategy was down 6%. Now it's down 1.58% on the day. So not bad at all for the crypto stocks. Now, another reason Robinhood's running and the S&P is running. Look at the S&P. Wow, 554. I didn't see that for the past 2 hours. Last time I checked, S&P was 553, 554.73. Dare I say it tries to go for 555. One of the reasons why the S&P is mooning right now and the entire market's doing well is because after that unemployment number we got today at 4.1%, with the job revisions down 111,000, added 206,000, the Fed swaps priced in 2 rate cuts, which is really important because as soon as we got 2 rate cuts priced in, I think that's when probably around like 11:30, that's when the market kind of started turning right there. As you can see, we went all the way down, then back up 553.62 right now at 554. So that unemployment number actually was really good because it priced in the probability of rate cuts coming. The Fed, or at least the market, feels that we're more likely to get a rate cut than not. If we get a rate cut, that's good for Tesla. That's good for Palantir. That's good for Robinhood. That's good for the whole market. Obviously, that's good for the S&P. We'll deal with 25 when 2025 comes, right? But to end this year strong, and to be able to bring these profits and gains into 2025, you need those rate cuts. And it seems like the Fed, or it seems like the market is pricing in those rate cuts. Look at that. The S&P 5 cents away from 555. That would be the 32nd. There you go, 555. I think that's the 32nd all-time high we closed this year. So we've had 30 or something all-time high closes on, well, we haven't closed yet, but the 30 or something all-time highs that we've reached on the S&P. We'll see if we can close there. Tesla fighting for 250, and then Palantir, it seems like it will comfortably close above $27, which is exciting. Exciting. Lisa says, baby camping and making bank today. I love it. Palantir Tesla Hood is the portfolio builder. Not bad at all. Raw thought 56K is the same K as 70K for Bitcoin. Most people aren't bullish enough. I'll sound crazy until it happens. I'm here for it. We're going to 5 to 10x in 12 to 16 months. I mean, look, I agree with you, dude. I think given where liquidity stands from a global perspective, and by the way, the whales are buying, dude. You guys know Mr. 100, the anonymous person. Some people think it's Bezos. Some people think it's Michael Dell. That dude who's been buying 100 Bitcoin every day for like the past year. He bought 700 Bitcoin at 55,000 each. That's the cool thing about having transparency on the blockchain. We can see this stuff. And I think the whales ended up buying, dude. Like July 5th, 700 Bitcoin, 55,000 each. I think most people felt this dip was exciting. So I agree. The question is just when Bitcoin's going to cooperate, and maybe there needs to be a rate cut officially, and there needs to be more institutional exposure from the ETFs, which might take some time to get there. But if that's the case, that's good for everybody, and broadly good for all the crypto stocks. So not bad. Someone said check in on Chris. Well, Chris was not the happiest. He tweeted a little meme about Palantir being at 27. Dude, we were on the Twitter Spaces like 2 weeks ago when it was at 23, and I was like, Chris, just come back, dude. Like, even if you bought like 20 shares, we would all welcome you with open arms. You don't need to buy 1 trillion shares. Just get back in. And as you can see, this is the guy from Inside Out, right? This is the anger. That's the emoji or something. He's or the emotion. He's a little upset. He's upset. What about Steve? Is he alive? Yes, Steve. I haven't talked to him since he sent me that that meme this morning. I'm pretty sure he's happy. He has a heavy Tesla position, heavy Palantir position. He was a little annoyed yesterday when he called me because his covered calls are making him a bit upset. But he rolled out of those, and so he'll navigate those. But regardless, I mean, Tesla and Palantir. Now we got 7 minutes left. Let's see if we can close. Let's see if we can close into the 27s. Ryan says the number 27 is sexy as fuck. I agree, dude. I tweeted about that. I was talking about this in the morning. The number 27 is so hot. Like, that number is just so cool. 2 and 7. And, I would love Palantir to be 28, but 28 is not as sexy as 27. Neither is 26. 27, there's something about the 2 and the 7 together that make it look cool. And I just love seeing Palantir at 27. It's just cool to see Palantir at 27. And Tesla at 250. 250 is pretty sexy as well. So this will be fun, dude. This will be fun. Fun close if we can get there. QQQ 494. Not bad. Up 1% on the day. And it's a Friday. Snowflake 143. Meta. We haven't even talked about Meta all day. Meta up 6%. So Meta's at 540. It's kind of like, I don't even believe I'm saying Meta's at 540 because I saw they got a price target when they were at 480 last week to 540. There you go. Meta 540. And then Google. I don't know if you guys looked at Google today, but it broke above 190. At one point, it was 192. Right now, at a 190.69. So Google as well on its way to get some momentum. One of the reasons I think Google and Meta are breaking out is because political advertising is becoming obvious that it's going to be a tailwind for both of those businesses. The Biden campaign is unleashing a $50 million paid campaign they announced today. Trump raised $333 million in Q2. So the money's there. They're going to spend the money. Social media is going to get some of that money. On top of that, the CapEx expenditures, or the capital expenditures, the CapEx for Google and Meta, they're going to spend more this quarter, but the market has internalized, okay, Meta's spending $5 billion, Google's spending $10 billion because they're going to make money off that money. So it's not like stupid metaverse money that is being spent. It's money that's going to be spent on GPUs to build out the AI infrastructure to enable software applications like Meta's and Google's AI advertising or Gemini to actually result, or Llama, in ROI for shareholders. So I think the market has internalized that that's okay. And if that's the case, then if they show an increase in earnings, I don't think the market's going to care. They're not going to tank Meta just because it increased CapEx. Look at the S&P, 555. Wow. Wow. Just amazing, dude. Just an amazing day. And again, all those people chilling in money markets, unless the market collapses, you just like, I think those people, I definitely think some of that FOMO happened with Tesla, which is why Tesla's ran. Maybe that FOMO is also happening with Palantir, and some of that money market fund is saying, all right, fuck it. We're not going to chase NVIDIA, but we're going to go after Tesla and Palantir. And maybe it's just coming into the S&P, but there's new money coming in. Like, stocks can't go green unless there's more buying than selling. So money is coming in. The question is, where is it coming from? And maybe it's coming from money markets, but we saw that they added 50 billion. So it'll be really interesting to see how, when interest rates get cut, where the liquidity comes from as well. What are stocks that are red? Let me go to stocks that had a 52-week low today. So give me a second. Richard says, if you had a contract for 27 strike price on the 26 Palantir, would you recommend holding over the weekend if up 90%? July 26, $27 call on Palantir. That's a tough one, dude. I mean, 90% is amazing. Like, that's a good return. But if we're healthily closing above 27 and, we start next week, like, look, do I think Palantir could get below 27 next week? 1000% that's possible, because we have not established any type of relationship above 27. We've flirted with 27. We took it out on a couple of dates. We have not hit the home run yet. So we need to spend some time with 27. But at this point, given the trend is up and earnings are coming up, and July tends to be the best month of the year historically in an election year, I personally would just kind of play it out. Now, granted, if you got a lot of money in this, then take out your initial as well. If this is like a $20,000, $30,000 trade, then yeah, take out your initial and just let the rest ride as house money, so you don't have to worry too much about it. But it looks like we're entering into the era of 27 for Palantir. And unless next week is bad on a macro level, I don't know if we have to come back down. Could we come back down? Sure. I don't know if we have to. And so we'll see. Tesla 251, Palantir 27. Stocks that had 52-week lows today. Bristol Myers Squibb. Walgreens. Wow, Walgreens bottomed again today. Because the reason I'm trying to see is, no, Walgreens up 1%. Oh, so I got to 1085. Oh, wow. So some of these names, even though they bottomed, they rebounded towards the end of the day. I'm trying to see if money left any of the stocks that bottomed to enter the Tesla, Palantir, Googles, Metas of the world. And so I'm trying to see, did any stocks really take a beating? And maybe some of that money rotated. Bumble, 52-week low. Papa John's had a 52-week low. Not that many interesting names. Yeah, really not. Honestly, these look like a lot of value stocks that had a 52-week low. Okay, let me go to the 52-week highs. 52-week highs today. Palantir right here, 27.23. 52-week highs. We got obviously Palantir. Well, actually, no, Palantir was 27.50, so we actually didn't hit the 52-week high. 52-week highs were Microsoft, Apple, Google, Amazon, Walmart, TSM. Where's TSM? Wow, is TSM in the 180s? Holy crap, 184 on TSM. There you go. ARM, oh my God, I didn't even look at ARM. ARM, 181. Wow, ARM's up 7%. SoftBank's really happy. SoftBank's really happy about that one. SoftBank is not feeling soft on that one. That one is making it a hard bank right there. 7% up on ARM. What else do we have? 1 minute until the close. We have about 40 seconds till the close. ARM, SAP, Netflix hit 697. What? Holy crap. The Netflix tried to close in on 700, 690 right there. What else do we have? Moody's, Trade Desk. Trade Desk has 100. Right now it's 99.96. Barclays, AppLovin. Yeah, those are the main ones. A lot of the tech stocks. Yeah, pretty much the tech stocks. Those are Oracle. So a lot, Costco, a lot of good names. A lot of good names hit 52-week highs today. All right, in 20 seconds, we are officially closing above 27 for the first time since late February. It is time. We've had a hell of a year. We're just getting started on this journey. Thank you, everybody, for being here. It is now 4 p.m., July 5th. The stock market is now closed, and Palantir is closed above $27. All right, Palantir, 27 close, and Tesla, 250 close. That's so beautiful. Palantir and Tesla, they got the job done. Really quite phenomenal. Obviously, Tesla over the past month. I mean, that is just unprecedented. This stock was $200 on Monday, bro. It's Friday, and we had one day off from the stock market. 250. And Palantir was 25 on Monday, but 2 weeks ago it was at 23. And so both just an incredible run. Nice to see them close. 27 on Palantir, 250 on Tesla. Google closes at 190, Walgreens 1126, TSM 184, ARM 181, Netflix 690, MicroStrategy recovering a lot from what it lost, down 1% of the day, 1281. Robinhood ends the day 2267, down 1%. At one point it was down about 5%. Bitcoin up 2.35% after getting liquidated down to 53,517 last night, now at 56,519. Meta 539.91 on the day, up 5.87%. Nvidia, actually some money left Nvidia today, so down 2%, 125.82. Uber was down a little bit today. GameStop was down a little bit today. Chewy was up 3.69%. Costs was up 25%. Carnival Cruise Line down 1.38%. Enphase down 2%. Interesting, Enphase went down and Tesla went up, especially because rate cuts are more likely now. So weird that Enphase came down. But Enphase did come down. James says, I made 39,000 on Tesla this week. Congrats. Not bad at all. Let me know in the chat if you realized any profits. Not just, I mean, you can say if you're up on paper as well, but if anyone actually realized whether they were covered call premiums or you sold some Tesla or Palantir, that's fine as well, right? Like, let me know if you actually realized profits this week. PayPal 59.76, Google 191. SMCI 846, that was flat today. Shopify 67. Where's Disney? I'm seeing some people on Twitter getting bullish on Disney from a technical perspective. Disney right here 97.99. They're not dealing with the activist investor Nelson Peltz anymore, so at least that saga's beyond them. I just never liked Disney, dude. I don't know anything about the technicals, but Disney Plus is boring and the parks business is capital intensive and like it's just not that interesting. So Disney has never been exciting to me, but maybe there's a case for it technically. Chris says I took out 50K of Tesla. That's not bad. Up 40,000 on Tesla. CK made 4x shorting Walgreens. Did you short Walgreens before earnings? Because if you shorted Walgreens after that earnings, I mean, it did keep going down, but still, that's not bad, dude. But there was still so much juice left to get out of that one. I had tons of covered calls closed at 0.01 today. Incredible, not bad. Lisa's up 1,000 on an SLV call I bought Tuesday at the last minute. Okay. Amazing. I was up 1% today in my portfolio. Hey, a win is a win, dude. A win. Whether you're up $1 or $100, green is green at the end of the day. S&P 554.67 that we closed. New high for the S&P this year as well. Bsoft shorted Apple at 350. This is stupid. Okay, where's Apple? Why'd you short Apple? Holy, no one in the chat wanted to tell me Apple's closing in on 230. No one. Literally no one told me this. What? Wow. I did not know that. I did not know Apple was closing in on 230 Dolores, bro. Pretty incredible, dude. Shorted Apple, huh? Who agrees with that? Who agrees with Bsoft's short on Apple? 226, huh? I did not see that I didn't look at Apple the whole day. Okay, I'm gonna tweet the screenshots for Palantir and Tesla. I have to quote tweet because I said hopefully we close above those levels. So I'm gonna tweet that right now. Palantir still green after hours. Tesla, there you go, 251.80 on the close, and it's green after hours as well. ARM up 8%. You guys know my thoughts on ARMs. I've been dead wrong on ARM all year. I thought ARM was ridiculously overvalued, but unfortunately, I mean not unfortunately, but like at the end of the day, SoftBank is pumping it, and I can't argue against SoftBank pumping it. I mean, they're doing whatever they have to do. So, and also ARM is necessary for all the AI shit. I just don't think $200 billion market cap makes sense on it. But whatever. I mean, it trades at a 58 times price to sales, dude. Like this one, but I wouldn't short it still because it's defied expectations and SoftBank owns 90% of the float. They're not selling, so they're artificially squeezing it. And the market thinks if NVIDIA goes up, then ARM is a beneficiary there. And Apple right here. Wow. Apple really 226. Apple really 226. No stress investors. We have been in a bull run for 18 months. If your stock is at a 52-week low, it was a bad investment. Yeah, I kind of agree with that. If your stock is not green this year, whatever stock you're big on, at least this year it was a bad investment. Now, that doesn't mean next year it won't be a good investment. But I mean, the fact that Tesla and Apple recovered this year, and I think everyone wrote them off, including myself, when they were both at 170. It just goes to show how much breadth actually did exist in the broader market. Now I know IWM. Wow, IWM flat for that. I all of us think small caps deserve momentum, but money keeps flowing to quality over small caps, and I'm okay with that. I'm actually okay with that. The fact that Tesla's up 84% from the lows, to me, is the broadening out of this rally. Instead of small caps going up, 1%, 2% year to date. Because at the end of the day, small caps suck. Like, most of those companies suck. And so if money's going to chase Tesla, and you could say Tesla's overvalued, then whatever. At least it's chasing quality over something like small caps. But yeah, I agree with that. If your stock is down year to date, it just wasn't the best investment this year, and it's not a 2021 year. If your stock was down in 2020, then you literally picked the most garbage of the garbage names ever if it was down in 2020, because everything was up in 2020. But this year, if it's not up, then that means the market just didn't see the momentum in it, which is okay, because maybe it just may take more time. And let's see towards the end of the year, right? Maybe, we'll see if there's any correction or anything. But so far, this market has favored, as Bay says, profitable companies and companies that actually put up numbers. So now, granted, some of those stocks that are at 52-week lows, maybe they're value opportunities, like a PayPal. Maybe like PayPal is an example of a stock that just hasn't moved this year. Like, it's been a bad investment. Like, there's no denying it. It's been a bad investment this year. It'll be a nice little tax harvest for me. I love how investors like, well, to sound more sophisticated about their horrible investments. Like, well, from a tax perspective, I get to say, like, it's the intellectual way of saying that you fucked up on something. But that's okay. How much is your sis in profit? So I'm still holding my sister's options on SoFi. She's up $5,000. I'm holding those because I think that if SoFi can run to 8 on earnings, she'll like exit close to $10,000. But if SoFi tanks after earnings, I don't care what. I'm selling those options after earnings. I've made up my mind on that. I'm not holding to. Remember, those options are $7, $12 spreads. This is what it looks like: $7, $12 spreads. So this market value, this 5,000, this is basically house money because we took out our initial last year. So this is house money. So if SoFi can get to $8 by earnings, you guys see this, right? Yeah. So the contract will be worth $136. Again, 712 strikes is not a lot to ask given it's at 630, but at one point it was at $8, right? So we were deeply in the money. So 136 times 70, we can exit for about 9,500 if SoFi goes to $8. 9,500 is not bad. I would love to give my sister $9,500, right? Not bad. But unfortunately, now let's say SoFi goes to $550 after earnings. The value of the contract will be 40 cents. We have 70 of them. So that would be $2,800. I'm going to sell it after earnings no matter what. I am not holding on until Q3. I don't care if SoFi goes to $50 by Q3. I'll just say I was wrong, whatever. But I'm selling after Q2. And hopefully there's an earnings pop and I can sell on the earnings pop and we can give her some money. If not, then we're going to have to take an L on that one. The good thing is it's house money, so it's not really her money she's losing, but still, it is what it is. And there you go. Well, remember, this is not a new call. This is we bought these calls in May of 2023. So at one point these calls were up like $18,000, and that's when we should have sold. But we did take half off, right? We took the initial out, so we did get the initial money back. But unfortunately, SoFi has collapsed. This is the only SoFi exposure left I have. It's my sister's calls, and I'm just hoping at we get to $8 and then we can just sell those. Sell before earnings. I'm gonna give it till earnings. I feel like SoFi's gotten so beat up. I don't think SoFi goes to 550 on earnings. If they do, then whatever, dude. I was wrong. Like I'll take that L, but I'm not gonna sell it before earnings because I do think it's been so beaten up, like it has nowhere to go but up, right? Right? Is that like, dude? This is kind of ridiculous. As long as if they show higher expectations on guidance, which they tend to do. Galileo grows a bit more than expected. Member growth is up there. Like, I think we at least get a pop to 750, which means I can exit for like 7,500 versus 5,000 right now, which is worth the gamble to me. If not, then whatever. Then we'll figure it out. Tesla 251 and then Palantir 2721 after hours still on the day. What else do we have? Unity. I haven't looked at Unity. Unity internally, they have a lot of issues right now. Unity. So I've never been super excited about Unity, but if you believe in their long-term vision, Yeah, $15. After they pulled what they pulled with developers, Unity just became not exciting. So I don't know. It's not something that's super interesting to look at. Let's hear from Jeremy Siegel. Let's see what he has to say about the market and when the Fed touch these rates. Here we go.
Your take after this jobs report and the market's reaction to it?
Yeah, I think it was a pretty weak report. When you look at the details, I know the headline number beat, the revision was beat, the details were not good. We are in a slowing economy. The Fed at the beginning of the year, last December, said that GDP growth this year was going to exceed 2%. Well, we got first quarter, that's under 2%. And although we're all enthusiastic thinking, oh, this quarter it looked like 3, then it looked like 2. Now most of the experts, including Atlanta Fed and the other banks, think it's under 2. I think it's really time for Chairman Powell to really tee up in the July meeting a cut in September and maybe another one in November.
The November one is hard because that's 2 days before the election. I don't know if they do November, but September, December does seem possible.
I think inflation is definitely under control, and I don't want to see this slowing economy turn into something worse.
No, that's the risk, right? That, as you lay it out, that the job market, half the mandate, right? Let's not forget, half the mandate about employment. The job market doesn't get away from the Fed just when they think they've got it right.
Yeah, absolutely. There's an economist, Claudia Sam, SAHM, who many years ago had a rule that she investigated that when the unemployment rate rises a 0.5 percentage point, and that was on a 3-month moving average basis, the probability of a recession was well over 90%. Well, guess what? With today's report, we just moved to 0.5% over the low that we hit earlier this year. So I'm not saying there's a recession, and I don't think it's anywhere near 90%. I'm just saying that the Fed has to take some of these indicators, including the inverted yield curve, into account, including the slow growth of the money supply, which, although has stopped shrinking, is not growing fast enough to, I think, support a strong GDP economy. So although I think stocks are still in an uptrend, and the growth stocks still are certainly walloping the value stocks, I think Powell has to take note.
I feel like you're suggesting that no cut in September means recession on the table. No cut in September means this market might be in trouble.
Potentially, yes.
I agree with both of those things. No cut in September means, yeah, the market could be a lot in trouble, and obviously we could trigger a more, harder recession.
And again, I'm looking at the future. Listen, next week we get the CPI. That's certainly going to be very important. We have jobless claims. I like to see them under 240. They've just been tickling that 240 level. A breakout on that. Why not be preemptive? The commodity market is under control. All the others are under control. As you know, Scott, we've talked so long about the fact that they use realistic shelter costs in their CPI, they would be much lower than what they have now. I think he can afford to bring us a more normal Fed funds rate and relationship to those long rates, which do see, as we saw today, a potential slowdown.
I agree with the professor. If we don't get the cut in September, we're screwed, in my opinion. Like, unemployment going up the way it's going up is not something you play around with. And we're not asking for a lot. We're asking for 25 basis points. And remember that the housing crisis we're seeing right now, that's largely due, we've analyzed it a lot, to high interest rates. And so we're going to need to see a little bit of relaxation on the cuts. Now, the CPI next week, that's going to be, remember how I titled the I think it was April CPI. The title of that stream was The Most Important Day in the History of Planet Earth. And then I fell asleep for that one. This one is actually going to be the most important day on the history of planet Earth. If this CPI is hotter than expected, that means a rate cut in September potentially might not happen. Now, granted, I don't think that's going to be the case because I think we had a good month in May. But if it's not, I mean, the rest of the year could get a little dicey. So we got to make sure we have a good inflation report for that CPI. And I think we will. Oil, although it's coming up a little bit, it was down in most of May. Oil down again a little bit today. Housing, hopefully, I mean, it is down. The question is if the Fed is looking at the right metrics to say it's down. And then, the one thing about airlines and like travel, I wonder if that's going to be up because we saw so many stats that travel is up with the TSA and the cruises and the airlines. However, if there's so much demand, maybe those prices actually came down to match the demand for travel, and it kind of normalized. And United and the airlines, they maybe lowered prices to match the amount of demand that we're seeing when it comes to travel. So if that comes down, then the only thing left is shelter and auto insurance, and hopefully those two take a little breather, and that'll be important. Was that the day you overslept? Yes, that was the day I overslept. I was dude, I felt so bad, but like I stayed up too late that day. So I'm gonna have to make sure I'm here on time because that CPI is gonna be very, very important. 4.1% unemployment, maybe a surprise interest rate cut in July. I think it is possible, even if it's even a 10% possibility. I do think a surprise rate cut in July, which would be, dude, if we get a surprise rate cut in July, oh my God, it's gonna be fun. It's gonna be fun. I don't know if J Powell, especially because we just got the minutes that they were bearish in the minutes. So like, but maybe they're just being bearish because they have to be. Maybe we actually do get a July cut. Rocket Lab up almost 6% today as well, 583 or 588. So not bad. When is CPI? Next Wednesday, I think. When is the next CPI report? Or is it Thursday? July 11th. July 11th is Thursday. Yeah, it's Thursday. So next Thursday. That's going to be the day of Delta earnings and Pepsi earnings as well. And then July 12th is the bank earnings. So actually next week, the end of next week, we get back into earnings cycle. And next week's going to be very important to see what happens. Any thoughts on WBD? Steve likes Warner Brothers. They do have a crap ton of debt. That's the issue with them. Yes, they are cheap on a price to book. I just don't think they're an exciting company. Like Warner Brothers Discovery is not that interesting to me. But their debt is also annoying. Yet they are, I would say conventionally they're cheap. I mean, the price to sales is very low, along with the price to book. But there's nothing exciting there. And I think the thing about stocks like Warner Brothers Discovery is what's the catalyst this year, right? Like, unless we go from growth to value, even though it's trading at a price to sales of under 1 and a price to book of under 1, what is the catalyst? And same thing with PayPal. If there's not a catalyst in a bull year, and it's not a stupid bull year like 2021 where anything's going up, and there's not a growth to value transition that might happen in 2025, Verizon, AT&T, all those stocks might start getting a sort of capital going into safety as they leave the Amazons and Metas of the world because those had too much of a run. But at least right now it's growth and it's profitability and it's like catalysts. And I think crypto stocks have catalysts. Small caps with different sorts of earnings potential have catalysts, like the SMCIs of the world. Semis have catalysts. AI have catalysts. Obviously, I don't know if Warner Brothers has any catalysts, and media itself is also not a big catalyst this year. Yeah, no stress investors. This is a winner's market, not an everything market. That is correct. This is a winner's market, not an everything market. And because it's a winner's market, that's what matters. Like not everything is going to win when it's a winner's market. All right. Let's see. What else do we have? I'm buying Warner Brothers for Harry Potter and the DC comics. Do people even care about Harry Potter anymore? I'm sure all the Harry Potter fans are going to be upset at me. Harry Potter is big. It's a big deal. It's always been a big deal. But I don't know if people care that much about Harry Potter. Oh, we got Ashwat. All right, here we go. The Dean of Valuations. Let's see what he has to say. 7 run. And let's see if he thinks things are cheap. Here we go.
Stern School of Business. Welcome back. It's nice to see you.
Thank you for having me.
I feel like, it's becoming a bit of a broken record. I mean, we have you on. Tech stocks go up. NASDAQ extends its record high. And I ask you the same questions because they're the only questions that really seem to matter right now. But your answers might have changed because the stocks continue to go up and the valuations theoretically are getting more extended. How do you answer it now?
It's a bit like Groundhog Day. You're absolutely right. We talk about the same issues over and over. But collectively, these 7 stocks have had, it's not just the last 6 months. If you look at the last year and a half, they've added $8.8 trillion in market cap, just these 7 companies. Just to give you
Damn. That's a lot.
Perspective, the second largest market in the world, China, is a market cap of 12.1 trillion. These 7 stocks alone have added more in market cap than the entire German market, the French market, the Swiss market. It's been an astonishing run. But I would also argue that before we dismiss these as risky tech companies, these are the money machines in this market. So when Jeremy Siegel talked about value stocks, I think in many ways, these have become the value stocks for investors who care about earnings and cash flows, because these are the companies that are delivering those earnings and cash flows.
That's a hell of a statement. That's a hell of a statement. The Mag 7 have become the value stocks because they're the only ones producing value. I like that, dude. If that's the trend throughout the rest of the year, it seems like those stocks are going to continue to do well.
Wow. So you don't necessarily think that we're in any kind of danger zone in terms of valuation here?
Now, if we're in the danger zone, it's not just the 7 stocks are in the danger zone of tech stocks, it's a market overall. I compute a monthly market equity risk premium. It's my personal indicator of how hot or cold the market is. Start of July, that equity risk premium, the implied equity risk premium for the market is 4.11%. That's the lowest number it's been since September of 2008. In other words, it's almost as if the market has raised the last 15 years, and we're looking at numbers very much like what they used to be before the big crisis, the 2008 crisis. Now, the question we can ask is the market overreaching on that assumption? But a 4% T-bond rate and a 4.11% equity risk premium is 2005, 2006 numbers, not 2018 or 2019 numbers.
Does that tell you that we might be heading into a certain place we need to be aware of?
Yeah, I think we need to be careful. I think 4% to me is a red flag, at least from the numbers I've looked at historically. Once equity risk premiums drop below 4%, it's almost like a magnet pulling them back towards a 4%. So I'm going to track that number, and I track it at the start of every month. And at the moment, I think we're getting to a point where even pre-2008 status, you'd say this market is reaching, a zone where you might need a correction to clean it up again.
I think what's interesting is you also make the point that the market is not being driven by rate cut expectations. Now, I'll grant you that because it feels like we've recently anyway stopped obsessing over the Fed. However, today we're thinking about it again because we got the jobs report. The Fed chair himself is on the Hill for 2 days next week, and we're going to have more inflation data coming down the pike in the next handful of days or so. And we're going to start thinking about rate cut expectations. And I think at this point, there's a pretty good expectation, and it shows in the market futures itself, of September, December cuts coming. So we must be pricing it in at least a little bit.
Let me suggest an alternative, a narrative, which is, let's say rate cuts happen. The Fed cuts rates in September, December. But let's say U.S. Treasury rates, especially at the long end, don't change very much. In a sense, the market's saying the rate cuts happened. T-bill rates, the short end of the Treasuries might be affected. But my point is that the market seems to be going up in spite of rate cuts not happening. It's almost as if the market has decided there's a different narrative driving it. And I think the closer we get to November, I think the less rate cuts are going to be the issue, and more the issue is going to be what's going to happen on tariffs and taxes, which are going to be driven by what happens in the election.
Okay, speaking of the election, By the way, hell of a statement by the professor, right? Hell of a statement. The Max 7 have become the value stocks. Biden has unequivocally said he is going to be the president of the United States, or at least the nominee. I am the nominee of the Democratic Party. Just tweeted at 3:37. So all that Kamala Harris talk we talked about in the morning, it looks like Biden's shutting it down. Apparently, he just addressed the crowd and he said something about beating him again in 2020. So this happened just an hour ago.
Well, guess what? They're trying to push me out of the race. Well, let me say this as clearly as I can. I'm staying in the race. I'll beat Donald Trump. I will beat him again in 2020.
Wow. Yeah, he said I'll beat him again in 2020.
I will beat him again in 2020.
Well, I guess it's Biden versus Trump. There you go. Maybe that's why the market pumped at the end. He did that at what? He did that at 3:30. Maybe that was the last 30-minute pump. The market was like, all right, if it's Biden versus Trump, we know who's winning. There you go. Again, guys, I mean, objectively speaking, the market wants Trump to win. Like we saw that in the futures. We're seeing that in the performance. Like the market for crypto wants Trump to win. So whether you want Trump or Biden to win, the market definitely would like a Trump candidacy. And the question is just going to be, if they price in that he has a chance to do it. So Biden's going to be talking. He's going to do an interview tonight with ABC News. That'll be his first interview post the debate. So the market's going to be listening to that also to try to get a gauge of if he's able to perform. It is weird though, dude. The New York Times is very close to the Democratic Party. They reported that top Democratic donors want Kamala. And so it is weird that Biden unequivocally said it's him. Maybe he's just saying that in the next couple of days he'll pull out and you just have to say that for the moment. But as of now, it looks like he's staying in. And it'll be him versus Trump. Pre-recorded interview. Yeah, it's not going to be live. It'll be pre-recorded. It will not be live. Will Democrats vote for Biden if he is the nominee? I mean, yeah, I think so. It's not about the Democrats. It's about independent voters, people that are undecided. Would they vote for Biden? If Biden can't get his own Democratic allegiance to vote for him, then he's screwed. But it's more so about getting the people who are in the middle, who don't love Trump, they don't hate Biden, but they're trying to figure out, who they vote for. Do they want to vote for someone who they think might not be competent enough to be president for the next 4 years? I think that's the question. I think most of us realize a lot of those people are just going to go to Trump. They just don't care. They're not going to vote for someone who they think can't operate. So I guess we'll see, dude. I guess we'll see. And on top of that, Trump has a tailwind behind him, which is this court ruling. So now it looks like he's not going to be tried for this whole 2021 insurrection case. And it also looks like he's not going to get hit on this hush money thing. Again, I could be wrong here, but that from the Supreme Court ruling, it looks very possible he can get away with that. And if he does, that's another win for his candidacy. We will see. We will see what happens. We'll be covering everything as it happens. I'm going to cover the debate because CNN didn't copyright strike Meet Kevin and people. So next time they have a debate in September, I will cover that. And we'll cover the entire election as it plays out. Oh boy. Oh boy. Oh boy. Oh boy. Okay, let's get an update from Goldman Sachs. So we just heard the professor saying, okay, the Fed should cut rates. Goldman Sachs also agrees September we should see a rate cut.
Here to help us dig into the numbers is Goldman Sachs' chief economist, head of global investment research, Jan Hatzius. Jan, always good to have you. You were a bit below in terms of where we came in. Just give me your take overall and how many jobs were added. Also, there were significant revisions the last 2 months.
Yes, the headline number for June was higher than we expected at 206,000. But if you look at the private sector number, which was meaningfully lower, and a lot of job growth accounted for by healthcare, once again, with some weakness in the cyclical sectors. Alongside that, some big downward revisions, as you said, an increase in the unemployment rate to 4.1%. All of that means it's a decent report, but it is a bit softer overall than I think widely anticipated. And this is why the rates market rallied on the number at least a bit.
Yeah, now we're seeing, 75% chance of a September cut. You mentioned softness.
By the way, the 10-year went to 4.2. We were at 4.4 over the past couple of days, so now we're back down to 4.2.
Is this what you want to see, though, for a soft landing, so to speak?
I think it's a soft landing kind of report. It, I think, will reassure Fed officials that the labor market has continued to rebalance. Wage growth also has come down. We're at 3.9% now for average hourly earnings. And the more important report is probably next week when we get the CPI for June in terms of what the Fed's going to do. But I think this does support the idea that they will cut relatively soon. And we continue to think September is the most likely.
The rate complex moving in reaction to some of the uncertainty on the political front here in the U.S. I know that you have been studying the tariff plan proposed by former President Donald Trump and the potential impact that might have on interest rate hikes.
Well, it certainly would have, if there is a significant increase in tariffs, it would certainly raise inflation in the in the near term. We estimate that a 10% across the board tariff would add a little over 1 percentage point to inflation in the year after it is instituted. And that could have implications for interest rates as well. I don't think it's going to have an impact on how the Fed is going to act over the next several months before the election. They're very focused on the economic data. They've said time and time again that political considerations don't come into it, and we take them at their word.
Is there a reckoning to come on the fiscal imbalances, whoever wins the election in November, in the early part of next year?
Well, I certainly think that over time, we will need to see fiscal consolidation. We're looking at federal deficits in the 6% of GDP range, pretty much as far as the eye can see. There is no comprehensive plan on the table in terms of really bringing that down to more sustainable levels. Whether, at what point that occurs and at what point it really needs to occur, it's very hard to say.
So Goldman Sachs, along with every other bank that increased their price target to 5,600 to 5,800 on the S&P, I mean, their argument is all the same. AI is good. Earnings should be good because of AI. We should cut rates. Unemployment's heating up in terms of, a little bit of weakness in the labor market. The rate cuts will be a tailwind because unemployment's heating up on top of AI and earnings. Therefore, we have a good year. Like, that's the simple syllogism. That if anyone's asking you, hey, should I buy stocks right now? Like, that's all you have to tell them. And we looked at that chart a couple of weeks ago. Buying stocks at an all-time high historically has done better 48% of the time versus waiting to time the bottom on a stocks or or get a decent entry point, because you just never know and most people can't figure it out. So, I mean, money is probably going to enter in even if they've missed out on this run from 470 to 550 on the S&P. And if that's the case, we should get some momentum. S&P still 554 or even more momentum. Meta at 539. Palantir after hours, we're at 27.19. And here's the cool thing about Palantir. I tweeted this today. Palantir isn't even in the S&P 500 yet. Not even in the S&P 500 yet. I mean, Johnson's just like us buying Bitcoin yesterday. Yes, I bought $200 of Bitcoin yesterday, $150 of Ethereum yesterday, and $100 of Doge yesterday. So put in $600, whatever, $500. So small DCAs, but did buy some of those crypto dicks. Did I just say crypto dicks? Oh God, see, that's what happens when you talk for a living. Crypto dips, not the other thing. Oh, that's gonna be a clip. Anyway, Palantir is not even in the S&P 500 yet. It's not even in the S&P 500 yet. Now, we saw what happened to Tesla in 2020 when it got in the S&P 500 when it got in the S&P 500. It ran about 40%. Now, granted, that run then evaporated after, the macroeconomic cycle that we went through. But leading up to that S&P inclusion of December, it went up 40% in those summer months. For Palantir to run another 40% before we get into the S&P, if we get in by December, that would be pretty crazy. That means we would be that means we would be closing in on $40. I think that's going to be tough to see. But if that does happen, even if it's 10% run, that'll be fun. That'll be really, really, really fun. So we'll see. We'll see what happens. Palantir only has 40% institutional holdings. No one should be selling until it hits 60%. I agree. That's a great point. Cool comic guy. No one should be, thinking about offloading a massive Palantir position if institutions aren't even in yet. It means you're still fucking early. Like it still means you're early. Let me pull up the institutional ownership. And also, by the way, I don't know if you guys have checked out the insider selling on Palantir. There has been, and on Robinhood, let's actually check right now. There's been almost zero insider selling in the past month on Palantir. Let me pull this up. And I've been surprised at that. Like they didn't take advantage of this pump. Yeah, look at that. Last time, we got to sell like a couple days ago, but it was like 12,000 shares. It wasn't anything important. So since the Peter Thiel sell, there was like literally zero real sells. And let's go to Robinhood. Every time Robinhood collapsed, like from 23 to 22.50 or whatever on a green day, I thought, oh, Kathy's selling or insiders are selling. And I got none of those. All right. So we just got an insider sell on Robinhood. Okay, this is fine. This is the basic one. This is Vlad's 250,000 that he does every other month. So whenever you see the 250,000 from Vlad, that's like a scheduled B. Remember, he has 50 million shares. So he sells 250 almost every other month. And he's been doing this since the stock was at like $7. So that to me is irrelevant. But outside of that, we've really not gotten any major insider selling on both of those, which is nice to see because both have run pretty aggressively. So nice to see that didn't happen. We will have Palantir Weekly tonight. We'll have Palantir Weekly. Institutional ownership on Palantir. All right, let me pull that up. So I still think we're at 42% on the institutional holding. So we still have a lot of room to get back to 60% or to get to the majority, which would be 60%. As you can see right here, about 950 million-ish shares have been are owned by institutions, which is still not closing in on the levels we needed to get to potentially also get into the S&P. Maybe that's the reason we're not in the S&P yet. So there is a lot of more room to run once institutions get excited, and they're not excited yet, or else they would be buying more. And when they get excited, I think that's when we're gonna see some momentum for Palantir, even more than we've seen already. I mean, if we're running without the S&P 500, imagine when we get. Could it be a sell the news? Sure. But it could also be a ton of people, a ton of institutions buying up to get more exposure to Palantir. The core points I made about Palantir this morning on Twitter was that we need to raise guidance. We need to get growth up on government closer to 20%. We were at 16%, so we're 4% away on that. Carp needs to be Carp on earnings and continue to stress ontology over chips. If he does that, I think funds are going to get excited. Also, there's a reason why Stanley Drux left NVIDIA, came back to Palantir. He bought 800,000 shares for a reason. I think it's because he thinks software applications will be the ones that benefit. U.S. commercial will be at 45% year over year. Operating margins adjusted are already 36. Imagine that comes in at 38 or 40. The street's going to fucking love that, dude. The street's going to be so excited. Their rule of 40 numbers at 57. That's probably going to get closer to 60. And then I talked about in the morning, Sequoia is wondering why they have been funding startups in AI versus buying NVIDIA stock. And so I think when the world realizes most of the AI software startups are just Palantir, but they're not Palantir, a lot of the money just goes into the one AI software application company that is a winner, which is Palantir. And so those are the tailwinds that exist. Plus, if the company announces any new products, any new deals, I mean, like any of that stuff on top of all of this going into Q2 can be highly, highly beneficial for Palantir. Everyone's saying muted in the chat. I'm not falling for that. I'm not falling for a muted. But that's going to be very exciting for Palantir. And again, 2.75 billion of revenues. Right now, we're projected to do 2.675 billion. If we can get to 2.75, which is closer to 25% growth, I think like 23, 24, we're going to win, dude. Like the streets, there's going to be no excuse at that point. There's going to be no fucking excuse from the street. Let me go down to our guidance. And we have $4 billion in the bank with no debt. Yeah, look at this. Revenue growth of 2.67 to 2.689. If they say, hey, we're raising to 2.75, we're going to 30. If they say we're raising that to 2.75, I think we're going to 30. Now, I don't know if this is the quarter they do that. They might do that in Q3, or they might surprise in Q4. So I don't know. But if they raise that number, dude, we're not staying stuck in the low 20s. That's for sure. We're getting the fuck out of there, and we're moving on. So let's see. Let's see what happens with Palantir. The week of August 5th and 8th will be exciting. Yeah, that's going to be a very important week. Tesla also is July 23rd, so Tesla's going to be soon. Palantir 27.18 after hours. Tesla, wow, 252. Tesla's up green after hours. The Tesla rally is just incredible, dude. I mean, the amount of people that have like generated wealth in the past 2 weeks, forget 2 weeks, like 1 week since Monday, dude. I mean, let's look at those covered calls we were looking at. Let's look at those covered calls. So if you sold 220 covered calls on Tesla back when it was 205, which didn't seem like it was crazy to sell covered calls at 220 when it was 205, expiring today, those calls, I think they were going for like $2. They're $31. Wow, that's a 15x in a week if you bought those calls. Goodness gracious. If you sold the 230, that's at 2180. And if you sold the 250, that was 175. Even today, that's I don't know what that went up by, but I would imagine that's up from the week close to probably 4 or 5x from the beginning of the week. That's incredible, dude. Absolutely incredible. I just sold 265 calls for next Friday. Okay, so next Friday, 265, you got paid 365 roundabout. So $365. That's not bad. 265 would imply another 7% move roundabout. Yeah, I mean, if Tesla continues the run, it could happen, but also it could definitely take a little bit of a break and just chill out. I think it would be healthy for Tesla to take a break too. I think all of us agree it would be healthy. 250 calls for next week. If you sold the 250, if you think Tesla's going to tank back to 230, you got paid $880 today. There's 18,000 of those open. Wow. So people, interesting. Yeah, covered calls in the past week on Tesla just didn't go the way, I guess a lot of people wanted them to go. I had to roll 240 to 270. Yeah. Douglas says Palantir PE is sky high. It's like we are growing into the valuation we had months ago, but we're going to double since then without the growth. I agree. So that's why we got to get the growth. And that's why I've said this for the past couple of weeks. Q2 is the ball's in their court. They got to put up the growth. And if they put up the growth, then we're going to hold 27, maybe make our way higher. If they don't put up the growth, we're going back to 23. And I'm pretty unemotional about that, but any Palantir investor should understand that we do need to see some revised growth to get us there. Now, granted, a rate cut cycle, NVIDIA doing well, AI being the theme, even if the growth is not phenomenal, there are things in Palantir's favor, which could help it go higher as well. But the growth is going to be the most important thing. And then, worst case, if we don't get the growth and it goes back to 22, 23, unless we didn't get the growth for some fundamental reason, unless it's just like okay, this quarter, the growth just, okay, so buy more. Like I think now when you see it at 27, people will be upset it goes back to 22, 23, but like it's the same thing when it fell after Q1 earnings and it dropped to 21. It was like that, like nothing in those earnings. And we analyzed it pretty deeply. We got a price target upgrade by Brent Thill. Dude, like that guy doesn't even like it. He said, no, $25. And we were at 20 after earnings. So if a same situation happens like that again, it's a very easy buy the dip. I tweeted this picture. This was me on the phone with my sister when she was at work 2 months ago, telling her to dump the uninvested $15,000 in a Roth IRA to Palantir at 21. This literally happened. I called her. I was like, yo, we gotta make a move right here. We gotta put some money here. If you believe in Unity's turnaround, 15 is pretty juicy. I agree. If you believe in their turnaround is juicy, you have to believe in that story though for it to play out. I haven't done enough research on Unity, dude, so I'm not sure. But if you are convinced that story can turn around, then it definitely has gotten beaten up this year. All right. NVIDIA did get a downgrade today. Yeah, it was. I mean, the price target's still 135 on that downgrade, so it's not like that was an aggressive downgrade. But it was the first downgrade we saw on the street. That's why it made headlines. I don't know. NVIDIA's chilling right now, and it deserves to chill, dude. It's had a great run, so maybe it. And also, it was at 122 2 days ago, so it still is higher than it was back then. But we'll see what happens in the coming months. All right, Palantir 27.18, Tesla 252.20. Robinhood ended and is now on after hours 22.64. Palantir right here, 27.22, and then the S&P 500 ETF, 554.18 after hours. Not bad at all. New Street Research or something downgraded it. New Street Research. So there you go. Okay, I think that's it. Update on the BidX options plays. So we did that with TJ. Those are basically flat right now. It spiked up today. We got our average credit was like 7. No, our average credit is 8. It spiked up to 950 today because obviously Bitcoin fell, but then it normalized and it went back down to like 830. We got them at 8, so it's like down $30. So those are relatively flat. But those strikes are $24 by Jan 2025. And again, you know, Bitcoin bottoming it at 53,000 after this whole Mt. Gox liquidation. If that's the end of it, then hopefully there's no more like crazy events that can hurt Bitcoin. And then Bitcoin hopefully should be able to make its room back to 60s. Okay, cool. That's it for me, guys. I got to get out of here. And the Palantir Model 3 video, let me show you guys the thumbnail I made on that. I made the thumbnail a couple hours ago. That'll be out in like 2 hours, around 6:30. I know it's a Friday, but hopefully that'll be a good one to explain what's happening with Palantir. And it'll be a good one to also explain what's happening on the dev side for AIP. So that'll be out. And hopefully that'll be cool. This is the thumbnail. I just put the Palantir logo on a Tesla Model 3. So this is, let's just say me saying this is the Model 3 moment for Palantir is not my title. Someone else gave me that title. That's all I'll say. And that someone else is someone you all know, and they care deeply about Palantir. So it's going to be important to break that down and go deeper. And we'll talk more about it as well on Palantir Weekly. So Palantir Weekly, 11 p.m. We'll be doing that, and then that daily Palantir episode in a couple of hours as well. All right, have a great weekend, everyone. As June says, have a nice bike ride. I'm gonna finish editing the video, and then I'm going to the gym because I have to still work out today. So I'm going to the gym. I've been to the gym this whole week. Yesterday, the bike ride was like my gym, but I've been to the gym this whole week. I liked it. I'm back in motion, feeling good. I've been eating good this week. I had fish and rice, which is my one meal of the day. So no fast food, nothing like that. And we're keeping things going. All right, cool. Thank you, everybody. Hope you guys had a great week. If I don't see you this weekend, I will see you on Monday for the market open. We'll keep going from there. Next week, we got CPI, we got bank earnings, we got the Fed. We got a lot of stuff to discuss in terms of what's going to happen next week. And then we have to see how Tesla and Palantir continue to perform given their performance this week. I hate Bay Ray, dude. I hate him so much. Someone said yesterday I tweeted something about the gym yesterday, and someone said they clicked on the tweet just to see if I was wearing gloves in the picture. And I was like, wow, that's mean. That's very mean. All right. I love it. Thank you guys. We'll see you on Palantir Weekly tonight. Bye, everyone. Have a good one. Enjoy the weekend.